morning everyone and welcome to Moneycontrol live stream. You're watching the opening bell and I'm Santosh Nair. Well, with the budget now out of the way, once again the focus will shift to both fundamental and technical factors, and in the spotlight today will be Adani Group stocks which were among the big losers yesterday and largely contributed to the post-budget sell-off in the market. Adani Enterprises last evening withdrew its 20,000 crore follow-on public offer. The stock was among the biggest losers yesterday, down by about 28%, and it remains to be seen whether the sell-off in Adani Group stocks will continue today as well. Clearly, there's a lot of pressure on all these stocks, and already indications are that the Nifty will open on a bearish note. The SGX Nifty already down by about 150 odd points. Last evening, US markets ended flat, and Asian markets are trading mixed at this point in time. The US Federal Reserve has raised interest rates by 25 basis points and has so far given no indication that it will be pausing the rate hikes anytime soon. It has said that the restrictive stance would continue for longer. For a change, foreign institutional investors were net buyers yesterday. They mopped up shares worth about 1,800 crore, not that it had much of an impact on overall sentiment. Domestic institutions too were buyers, but still you had the Nifty closing in the red yesterday. We're seeing build up of long positions in futures of Cholamandalam Finance, Jindal Steel and Power, and whereas there are short positions being built up in almost all the life insurance companies yesterday, and besides that also Coal India, Dalmia Bharat and Adani Ports. And a quick look at the newsmakers this morning. IndusInd Bank, the company, yesterday came out with a clarification without naming the group that total outstanding towards this particular conglomerate was just about 0.5% of the bank's loan book, and total non-fund outstanding towards the group now stood at about 0.85% of the loan book. Now, this is important because IndusInd Bank has fallen close to about 15% over the last week or so. Well, with that, let's take a quick check on the markets before we return. As expected, the Nifty has opened on a bearish note, down 88 points in early trade. The sensex is also under pressure, down by a little over 200 points. Some recovery seen in select Adani Group shares. FMCG stocks are trading higher in early trade. Among the prominent losers, we have ICICI Bank, M&M and HDFC. And with that, let's continue with the major newsmakers of the day. IndusInd Bank has also said that its non-fund exposure is largely working capital requirements and is also secured. Hero MotoCorp yesterday reported total sales for the month of January, which were down about 6.3% at 3.56 lakh units. Exports were down by about 67% at 7,253 units. Overall, the outlook for two-wheelers continue to remain subdued. However, some analysts feel that the worst may be behind. Eicher Motors said that sales at VEC, which is Volvo Eicher Commercial Vehicles, were up 32% year on year at 7,181 units. Domestic sales were up about 50%. UTI AMC reported a disappointing set of quarterly numbers yesterday. Profit down by 53% to 60 crore year on year, whereas revenues were down by about 4.3%. Most asset management companies have reported a disappointing set of numbers for the third quarter. This, even as inflows into equity schemes still continues to be fairly robust. IDFC Bank reported a net profit of 271 crore rupees, whereas revenues were down by about 44% year on year. In brokerage bets, we have Jubilant Foodworks. Morgan Stanley has rated the stock as an overweight but cut target price to about 560 rupees. The third quarter earnings missed estimates according to Morgan Stanley, and the brokerage feels that sentiment towards near-term earnings is less optimistic, but on the positive side, valuations seem to be offering support. They're not very expensive, and according to the brokerage, a better disclosure, strong store expansion momentum and a new loyalty program are some of the positives for the company, and also the response to its Popeye brand of restaurants so far has been good, and the company is going about expanding it in a calibrated fashion. And over to the stocks in the spotlight this morning, SBI Life, HDFC Life, ICICI Prudential Life. So these are some of the stocks that are likely to see some action today. Now, the budget proposals, which is encouraging more investors to shift towards the new tax regime, and also at the same time plugging some of the loopholes for tax arbitrage to high premium products that those have been plugged. So that is likely to be a big negative for the life insurance companies, and according to brokerages, these the proposals will likely impact demand from high net worth individual, especially growth in non-par guaranteed return products. This is where this has been a big hit with HNIs. This segment will be clearly impacted, and most of the annualized premium equivalent growth and also value of new business margins, which were showing a good expansion in the recent years, these were driven by guaranteed return products, and those products now may not find too many takers. Also, this could lead to both estimates for annualized premium equivalent as well as value of new business being lowered. CLSA has downgraded its ratings on many of the stocks. It has cut target prices by about 25 to 35%. It has downgraded HDFC Life to sell, Max Financials to underperform. Earlier rating was buy. It has downgraded ICICI Prudential and SBI Life to outperform. The previous ratings were buy. Ashok Leyland was one of the key gainers in trade yesterday. The profit came in at 319 crore versus loss of 121 crore during the same quarter last year. Revenue was up about 57% to 10,400 crores. Margin expansion was also seen. Operating margins came in at 12.9% compared to 9.9% during the same period last year. Also, January sales were pretty robust, up 23% to 17,200 units. So that's been one stock that's been doing well for the last few sessions. And with that, let's wrap on this episode of Opening Bell. Thank you for watching, and we'll be back with you again at 3:30 p.m. today.